Heading into these results, you made the point that the market needs some clarity of their direction. Netflix is still the king here, but, the market and investors looking for some direction as for what's next. We know that Netflix is towing into live sports. Do you think that they're doing enough?
Well, yes and no. Like, they certainly have made a lot of progress with live sports, with some, positive results and some negative results. I don't think that they want to, or it makes sense for them to spend, tens of billions of dollars buying sports rights. ESPN's already done that. So I like their approach to sports because they're trying to measure the cost to the return. But, we're kind of getting sort of random sports on Netflix. But we will be getting more NFL games in the future. But I don't see that as sort of the end-all, be-all for them because it costs so much for sports rights.
Well, what do you think that end-all, be-all is? I mean, as you say in your notes, still the king here. You do own Netflix in your fund, but what do you think they should be really focusing on at this point as you have these swirling concerns, especially around engagement and increasing competition?
Well, as you saw with the, attempt to buy Warner Brothers and this whole thing of consolidating streamers, like the streamer business has reached sort of its max in that we have enough streamers, we have plenty of content, there's lots of competition. So, not to Netflix's fault, but there was, a lot of competition this quarter for them for these viewing hours. There was a lot of choices and people, will follow the World Cup or the Winter Olympics, or they're going to, watch what they're going to watch. And right now, HBO has a really good lineup, for example, and that might change. And it kind of goes back and forth. So what's the future for Netflix? And they've really made a commitment to video games and live entertainment. And I think it makes the most sense for them to continue into these two paths. Video games is a wonderful business if they can monetize their IP this way. And then live entertainment is really where they haven't been, which I think is a huge missed opportunity. Getting these movies into theaters, putting these shows in theaters, and generating revenue from the theaters. In my estimation, that Netflix could make billions of dollars a year just in the movie theaters if they threw a few of these movies out there. And nobody cares if they have to wait 2 or 3 weeks to get the movie on the streamer.
Yeah.
It's not that big of a deal. I think it actually helps build anticipation for those titles on the streamer once it gets out of theaters. So I think that's the next thing. It's live entertainment, it's sports, and it's video games.
But on the theater side, too, I mean, let's get to some leadership questions, too, Ross, or strategy questions, I should say, too. I mean, it seems like they've been a little reticent to embrace that idea. I mean, there was a lot of talk about K-pop Demon Hunters and how quickly they pulled that from theaters, despite the fact that everybody seemed to want to see it in theaters and be part of that experience. And it seemed like they kind of missed the mark. Sometimes you have to read the room and realize that you have something there, just run with it. Forget, I mean, I don't know what their internal metrics are like when it comes to what do we need to get on the streaming platform first relative to the theaters. But do you have confidence that the management has the ability to pivot when they do sort of tap into something that clearly has grabbed everyone's attention? I mean, we're an attention economy.
Right. And this is why I was buying the stock recently in the low 70s, is because I very much believe Ted Sarandos is sort of the genius of Hollywood right now. And they have the best management around. So I'm sure they get what they need to be doing. It's just a difficult time to make these kind of moves right now. Hollywood has so many cross currents going on. And so Netflix, after just going through this whole battle for Warner Brothers, which I was glad they lost, they have the capital, they can do things, and they're very measured with their strategic focus. So I think that's all good. But when you look at the stock down here, let's say it's $70, you're paying less than 20 times forward for Netflix. Netflix isn't going anywhere. And I have to, reiterate this. We're going to be watching Netflix. Our kids are going to be watching Netflix. So for investors, this is a wonderful opportunity. Whenever there's uncertainty over Netflix's future, they always seem to figure this out. And we value the company substantially higher than the current price today. So any pullback here on earnings, we think is an opportunity because these are very durable, good earnings reports with lots of cash flow. They buy back their stock. They're a very shareholder-friendly company.
Well, and I don't want to dispute that, and I don't mean to be glib, but I mean, we had you on last quarter, and the stock was under pressure, and you were like, don't count this out. The stock will be back. It's 3 months later. It's still down. It's down in the after-hours trading. The buyback, I guess, provided a little bit of a floor, but not much. Going forward, as you value this stock, Ross, and I mean, we had Geeta Raghunathan. I go through her decks, and she's valuing this up against, Warner Brothers and Disney, et cetera. I guess my question is that the right way to value Netflix? Should you be valuing this more? I know it's hard to get visibility into YouTube and some of these other things that are under the umbrella of larger companies like Alphabet, but is that where we need to start looking at the valuation comparisons?
No, I mean, valuation should be relevant to your track record as a company. It's certainly which industry you're in matters. So when you look at a company like Warner Brothers or Disney and you look at revenue and earnings growth, well, there is none. So that, that's a totally different story than Netflix, which has had consistent, incredible earnings growth for a very long time. I've owned this stock for a long time. And so you're talking about a company that just, they beat on earnings. Let's be real. It wasn't like a bad earnings report by any means. The fact that they're not blowing it out right now, I get it. And I do think they need to articulate, like, where are they going to really grow? They said they're going to grow their business, substantially over the next 5 years. So what's the strategy? And that's, I think they need to articulate more clear. But from an investment perspective, whether the stock's the same price as it was 3 months ago or not isn't relevant to me. I'm a buyer of these securities, but where the stock will be in 5 years is what's relevant to me. And so I think if you're an investor, this is a great opportunity when there is uncertainty, when people don't believe in Netflix and you're willing to get an under 20 multiple for forward earnings, when people are paying ridiculous multiples for all kinds of stocks. So, we own brand name companies that aren't going away. It's almost like a Warren Buffett pick at this point. At this valuation, he added Google, maybe late, maybe he's going to look at Netflix now.